Hello and welcome to another Smaulgld live stream. Today is Thursday, October 18th, 2018. And tonight's episode is Hungary's game-changing gold purchase. We're going to talk about Hungary's big gold purchase, the Central Bank of Hungary. But first, let's take a look at what's happening in the gold, silver, and crypto markets. So gold today actually had an up day, even though the market was down big time. Gold was up small time. Let's take a look. So the gold price opened at 12.21, got as high as 12.29 as the market sold off, but closed at 12.25. It's up about $3.61. Now we saw the first time on last Wednesday when the stock market fell big time, gold rose small time. But when the stock market fell big time again, or bigger time on Thursday, that's when gold itself rose big time. So maybe we'll see that follow through tomorrow, depending on what happens with the Dow. Also, the dollar index was up. So today was one of those rare days where both the dollar index and gold was up. And let's take a look at silver. Now, silver was down, not surprisingly, because gold wasn't really up that much. Can't expect silver to do much better, and indeed it did not. Silver opened at 14.59, got as high as 14.63 in that little rally towards the end of the day. Did at a low of 14.44. Pretty volatile today, and closed at 14.56 and was actually down 3 cents. So it was down about 0.2%. Now, what does that do for the gold-silver ratio? Well, the gold-silver ratio crept higher, went to 84.2. Now, I know so many of you have listened to the silver channels, and they have indoctrinated you with the idea that somehow silver has to go, the gold-silver ratio has to go lower. They've been saying it for 6-7 years. Many of you fervently and ardently believe that. And you won't listen to anything else other than silver is rarer than gold. The gold-silver ratio will go to 16:1 or even 1:1. There are so many uses for silver. And I guess, and I'm not going to go through them tonight. I've done many videos on this, but there's many reasons why the gold-silver ratio is where it is and why it has risen. But we're not going to talk about that tonight. Tonight we're going to talk about this game-changing gold purchase by the Hungarian Central Bank. So let's take a look at what happened. So on the 16th, which was Tuesday, the Central Bank, or the Monetary Council of the National Bank of Hungary, announced that it had decided to increase the gold reserves of its country. And this was spotted by, I believe, Ronan Manley of Bullion Stars. By the way, Bullion Star has some good information from Ronan and also from Koz Jansen. But in any event, he managed to get a hold of this press release, and he had it translated. And I'll read just a little bit of it, and then we'll go through what it means. So he said, well, the National Bank of Hungary said that they raised their precious metal holdings from the scant, they didn't say scant, they said from the previous 3.1 tons all the way up to 31.5 tons, which is a tenfold increase. And they mentioned that this is the first time that the Hungarian National Bank has bought gold since 1986. And then they said, in keeping with the historic role of gold, gold remains one of the safest instruments in the world, and even under normal market conditions, provides stability and confidence-building functions. Now, they didn't quite indicate whether they thought we were not in normal market conditions, but they do make a good point that it's never really a bad time to hold gold if you want a safe instrument, as they say. It provides stability and a confidence-building function. And then they mention that their 31 tons of gold are worth about 1.2 billion. Not a lot of money for a central bank, but still 31 tons is more than 3 tons. And they say this approaches the historic level that was held by our country back at the time of the Golden Train. They're talking about back during World War II. But they mention that the role of gold reserves in the nation and in the nation's economy strategy is becoming more and more appreciated, while both the possession and the increase of nations' precious metal holdings appears to be decisive international trends. And that is true, that you do have other countries, and they're going to mention Poland in a minute, that have increased their gold reserves. Then they say, just scrolling down here, with the decision, they now have the 31 tons of gold. It's about the same as they had back at the end of World War II in 1946. And they say the gold reserves are held for short-term investment and long-term stability purposes by national central banks. Now, if you think about that sentence, that's one of the best sentences. Gold reserves are held for short-term investment and or long-term stability purposes by national central banks. So they clearly indicate that they could sell the gold if they had a spike. And some people do buy gold for that short-term investment, because you could, while gold is stable, we have seen that you can get these spikes just like in silver, and maybe over time gold is smoothed out, but there are periods of time. So for example, last year you could have made 10-12% in a year and then sold, and you wouldn't have had the loss this year in the gold. And also they say that generally it's also held for long-term stability purposes by national central banks. The current decision of the Hungarian National Bank was led by a goal of stability, and there are no investment concerns behind the holdings of gold reserves, so they're not going to sell. They could sell if they thought there was a short-term investment, but in their case, they're saying, now they're going to hold on to this for stability purposes, which in a way I agree with, because if you really want to make short-term investments, and this isn't investment advice, there's plenty of other investment vehicles that could probably give you a bigger pop in the short term. You can buy a biotech, a crypto, any type of speculative stock, a FANG, that might rise more than gold might in a 2 or 3 month period. That's not to say that in a financial crisis that the gold might not pop more than those types of instruments. But generally, that would also be that not just an investment increase, but would be adding to the idea of stability in your portfolio. Because if there was a market collapse, the others would be falling and gold would be rising. But Hungary is clearly saying that the decision that they made to acquire these 31 or 28 tons of gold, now that they have 31 tons, is led by a goal of stability, and they have no investment concerns behind the holding of gold reserves. And then they said gold is not only for extreme market environments, structural changes in the international financial system, and deeper geopolitical crises. And again, they point to gold has confidence building effect in normal times. That is, gold can play a role in stabilizing and defending. So they're not quite saying that they're in extreme market positions, that they expect anything to happen, but they are saying that it's the point I make all the time, it can't hurt to have the gold in the portfolio for central banks. Certainly is not going to be a harmful thing to have gold, and therefore they have it. Gold is still considered, the press release goes on, to be one of the world's safest assets whose characteristics can be attributed to gold's unique properties, such as finite supply of physical gold and lack of credit and counterparty risk, given that gold is not a claim against a specific partner or country. Meaning, they, in this instance, at least for 1.2 billion of their reserves, they would prefer to have the certainty of the gold rather than perhaps someone else's currency or some other country's currency or some other country's bond. So they don't have to worry about the credit or the counterparty risk that you have in a bond when you have gold. And then they say, over the past few years, more and more countries have decided to continue to play a decisive role in the use of gold as a traditional reserve asset and have raised their gold reserves. Now we're going to take a look at which countries have actually done that. It sounds like Hungary is trying to Me Too their gold reserve acquisition. They're trying to do a justification on a Me Too basis, which really isn't warranted. We're going to go through who's added gold this year, and it's not a big long list, and it's not a lot. They've actually launched themselves into the top 3 with this purchase. Nevertheless, the rationale for adding gold makes total sense. And they say, as a result, our reserves are now up to 4.4% in gold, which is in line with average international reserve ratio for gold for the Central European region. Now, other countries we've seen, like Russia, their central bank has 18% reserves. Kazakhstan, 42%. Some of the Western European countries, 60 and 70%. So Eastern Europe, actually, when you look at Poland, Czech Republic, and Hungary, just in that Central European area, they're not really big gold holders. So getting to 4.4% is not that big of a deal internationally, but it puts them in line with the other gold poor Central European countries. Now keep in mind, Hungary is an EU country, as is Poland. And then they say, to close it off, this move from the end of the international rankings to the middle of the rankings has progressed both in terms of size and proportion of gold reserves. Obviously, when you have just 3 tons of gold, you're at the bottom. They didn't really move to the middle by getting to 31, but we'll take a look at that on another chart, because the top 20, in order to get into the top 20, you have to have 227 tons of gold, and then even the top 30. So they're, I don't know exactly where they are, but they're pretty far down. But obviously, they're not at the bottom anymore with their 3 tons. Okay, so let's take a look at what this means for Hungary. Now, I believe this is insurance, and it's not necessarily, like they say, it's not an investment. They're not expecting to cash it in. Remember, it's $1 billion now. It's not going to protect them in the way that a lot of people think it is. I mean, the gold price can go up tenfold, and it would still only be worth $10 billion. They have it for stability. They have it as an anchor. It's not there to solve all problems, and it's not there to make them rich. And I think that's how, I think in that sense, the central bank and an individual's gold holdings should probably take the same tact. It's there as stability. You might make an investment profit on it, but that's not the main reason that you have it. All right, let's take a look at central banks that have added gold. Now we hear this, and people say, central banks are adding gold. That is all I need to know. Hungary is adding gold. All central banks are adding gold. They are adding gold hand over fist. Well, that's not really true. You look here, I've compiled what the central banks have added in 2018. And basically, most of the gold added is added by Russia. Russia indeed does add, the Central Bank of Russia does add a lot of gold every month. And this year, they will probably add over 210, 220 tons of gold. But you can see, Russia is the big player. Now, if you go through the other ones that you can actually see on this chart, Kazakhstan is the other one. Kazakhstan has been adding 4 or 5 tons of gold a month this year. They'll probably add 45, 50 tons this year. India, and by the way, I did a report on this the other day. Kazakhstan has added gold to her reserves 71 months in a row. So they're serious about it. They've got gold in their backyard. They've got an increasing gold mining production, and they're converting a lot of that gold into their reserves. Same with Russia. Russia has a lot of the third biggest gold mining production, so they're converting 60-70% of their gold into their reserves, and they're selling some of it to China and some to India. Speaking of India, India hadn't bought gold since 2009, and they bought 15 tons of gold, I think, in three different months this year. And now Hungary has made what might appear to be, and who knows, it doesn't sound like they're planning on buying more, maybe a one-time purchase. So they've purchased 28 tons of gold this year. So when Hungary says, like other banks are doing, other banks really aren't doing that. Let's take a look. I mean, Argentina has bought 7 tons of gold this year. Australia has sold, I didn't put all the numbers on here, about 4.1 tons. Belarus bought a tenth of a ton. Colombia, 2.5 tons. Czech Republic has been selling for years. Little bits. They sold 0.3 tons so far this year. Ecuador added a ton. They see the Euro area lost 3.8. Germany sells about 4 tons a year. They've sold about 3.9 tons so far this year. Now, Germany is the second largest gold holder, and they sell for 4 or 5 tons every year. And I did an article for this for Zero Hedge, and it shows they've been selling gold for about 15 years now. Small amounts, but they don't replace them. They sell them to the government so the government can mint gold coins. So Germany doesn't seem to be concerned about losing their gold. Hungary, as we've seen, has added their 28.4 tons. India, it's 14.9. And Kazakhstan, it's 31 tons. Those are the big ones other than Russia. Mongolia has added 2.5 tons. Kyrgyz Republic, 2.5 tons. Now, both of those also produce gold, and the Kyrgyz Republic bank chairman has said he wants every person in the country to own an ounce of gold. A relatively small country, small number of people, and he has upped the gold reserves of that country in the last 3 years from like 4.5, 5 tons all the way up to almost 9 tons, which is a lot for them because it's a small economic country. Paraguay has added 1.5 tons. Poland, as we mentioned, that's the other big one this year, 9.3 tons. Russia, 160 tons. Serbia, I guess you can count them as Central Europe, 0.4 tons. Tajikistan, another one has a little gold, 4.1 tons. Turkey, 3 tons. Now, Turkey was buying gold at a pretty decent pace at the beginning of 2018. They sold a lot in 2017. They had replaced what they bought in 2018, and then recently they had to sell a lot of gold because of their financial crisis, so they're down to a net of only 3 tons. Ukraine is sold, minus 1.2, and Venezuela somehow managed to pick up 2 more tons, but they've sold a good portion of their gold over the past few years as their economy has deteriorated. Now, just keep in mind that 160 tons is basically 2/3 or 63%, a little less than 2/3 of the overall amount of gold being purchased by central banks. And basically, before India and before Hungary stepped up to the plate in the last 2 months, this year was really only Kazakhstan and Russia, and then Poland also recently made their purchases this summer. So those are newcomers, so that is an interesting trend. I used to say no central banks were buying gold, but now we see the Central European banks are indeed adding some gold. So you've got Poland, Hungary adding along with India, and that's a bit of a change. And not large amounts, but more than symbolic. All right, now let's take a look with, if you add up all those countries, positive and negative, this year, so far, 2018, central banks have been buying gold. Hand over fist, wrong goes star. 257 tons. Not bad, but it's not a lot of gold. And it doesn't look like it's going to increase much. It's not going to have much of an impact on the physical market because they say the World Gold Council, I've seen different estimates. The World Gold Council is conservative, that they do between 2,500 and 3,000 tons this year. I've seen others higher, up to 3,500. Let's just assume it's 3,000 tons this year. That would mean through August, about 2,000 tons have been mined. Indian gold imports already, if you're watching the other day, 2 nights ago, we showed that they've already imported 545 tons. So Indian imports, Chinese imports, consumer imports, jewelry use, much, much higher than what central banks are buying. And if you take Russia out of the equation, even with Hungary and Poland and India buying, with Kazakhstan, still not much gold moving into central banks, although there is a trend, instead of selling it, they're at least buying it. But the amounts they're buying is not the significant amount. It's not a reason to think that the gold is going to run out because central banks are hoarding it or anything like that. It does indicate, though, that as a matter of prudence, ones that hadn't purchased gold are adding cautiously to the reserves. But we're not seeing other countries adding to the reserves. We've seen them repatriate gold, but we haven't seen them add. But there's your chart showing so far the gold that's flown through India versus the central bank gold additions. And it'll be interesting to see if Poland, India, and Hungary continue to add gold. We expect Kazakhstan to do so because they've added gold 71 months in a row. They don't seem to be slowing down, and I don't think Russia is going to stop adding gold to her reserves either, especially given the diversification and the sales of U.S. treasuries. But I'm not sure whether the other three, Poland, Hungary, and India, will continue to do the same. Let's see what you think. I haven't been checking the comments, so we'll go over there now and see what we got. Z-Spec, don't they, AU and AG, have to go together when it happens? No, they don't. I mean, people say that, but silver and gold are not the same metal. They don't serve the same purpose. Gold is far more a monetary metal today, as we've seen. There's no big announcements of Hungary adding silver. There's no big announcements of Russia adding silver to reserves. We're not seeing it doesn't have the same current monetary value that gold has. Silver was, and people will tell you silver was money. Then argent is the word in French. It means silver is money. I get all that. And the silver was pocket change for thousands of years, and people used it as to transfer value. No two ways about it. Gold less so. I mean, gold was more of a store of value. It was also a currency, but both were widely accepted. Both were used. But silver by the central banks has been demonetized thoroughly and completely. They took it out of the coins in the 60s and all the central banks across the world. They got rid of silver certificates in the backing in the United States. And John Kennedy made it very clear that silver, before he died, served, he said, no useful monetary function other than to make coins. And then they removed silver from the coins because they figured they could cheapen them with copper and nickel. And that's what they've done. Gold continued on until 1971 officially as the underpinning of the financial system. Silver was gone from the financial system by the end of the 60s. So, silver was gone from the financial system by the end of the 60s, pulled out of all the coins. But gold remained part of the financial system officially until 1971, then when Nixon closed the gold window. But even after he did that, countries continued to, and to this day, still hold gold reserves. And we see they, over the last few years, even add to their gold reserves. So it's still considered an important monetary asset. And the profile of gold and silver are different aside from the monetary purpose. There's far more dollars spent on gold jewelry than there is on silver jewelry, partially because it's more desired. You give an engagement ring, it's usually in gold, not in silver. Silver is costume jewelry, just like silver is pocket change. It's not a cut on silver, but people, they try to make silver out to be somehow almost the equal of gold, that it's just a little cheaper than gold and it should be worth far more. Historically, it's not as valued, it's not as treasured, and it is more plentiful. But again, the relative rarity is not a good argument for the gold-silver ratio, because if relative rarity meant anything, platinum would be worth 10 times the price of gold because it's mined at a rate at 1/10 of gold. And I give other examples. I've made 3 paintings. Picasso made thousands. You would think, well, mine's rarer than his. My painting should be worth more than gold. That's an extreme example, but the point being is that the relative rarity is not the only price determinant. Also, silver is used in industrial productions far more than gold. Very desirable, many different properties. Best for electricity, best for reflection. But it's 70% industrial, and gold is 10%. And half of gold's demand is jewelry. And it's got about a 15%, 20%, maybe even a little higher investment demand. Silver doesn't have the same investment demand either. It had reached in 2015 about 20% for gold bars and coins, but that's fallen down back to where it used to be, about 5 to 10%. So silver is just not desired in the same way. And my theory has been, just looking at history and watching recent price action, that silver is not going to lead gold higher unless somehow there's some new industrial reason why people will need silver. Generally what happens is gold rises, establishes itself in a bull market, rises and rises and rises, and then if you look at what's happened in the 70s and then in 2008, 9, 10, 11, people all of a starting to say, wait a minute, what's going on with silver? Silver's kind of like gold in that it has monetary value. Silver is looks like it's undervalued and it's a small market, and then money flows into silver, and then silver does that big spike, and unfortunately, historically, then it does a dive. And over time, gold has held its value a lot better than silver. But silver will have, or has had, I don't know if it will ever, again, it might, has had bigger price appreciations, but has also had much worse price depreciations. So I think what's happening now is actually, if you're interested in both gold and silver, is exactly what you want to see. You want to see gold, since it's bounced off its bottom, rising steadily, silver falling behind but not outpacing it, and both of them moving higher in tandem, but gold doing better. And if we continue to see gold rise through mid next year and we're at 1350, 1400, silver should start to really ramp up. And if gold goes to 15, 1600, I would expect at that point, that's when silver can really begin a spike. So I think the longer and slower the rise of gold is, the better off silver is going to be, because silver has shown that it will spike and then it will collapse immediately thereafter. Now, a lot of that has to do with the two last spikes were market driven, but the dives seemed to have been orchestrated. So the 1980 dive was basically the COMEX taking out the Hunt brothers by raising margin requirements and then instituting sell orders only allowed on the COMEX, which basically just plummeted the price. And then in 2011, it looks like they did a big raid when the price hit 50 and drove it down. Now, it's easier to do that with silver. Silver is a very small market, so it's hard for it. If they want it to go back down, it's easier for them to manipulate it downward. Also, the very wealthy don't buy silver around the world, a lot because of the storage reasons. You know, when the price is 85 to 1, your storage bill can get pretty expensive. You're going to buy physical. So wealthy people prefer to have a draw at a Swiss bank or a Singapore bank where they can go and look at their millions in a small box instead of in a warehouse stacked with 1,000-ounce bars. But they don't have to rise together. In fact, I would say that in a financial crisis, or when people are worried about it, like maybe Hungary is, they will go to gold first. All right, Silver Fortune stopping by to say it was a massive 1,000% increase. Yeah, off a small number. See, that's kind of like pumper talk. Up 1,000%. Everyone's all excited about it. They bought 27 tons. It's not that big of a deal. They only had 3 tons. I mean, if I had an ounce, a tenth of an ounce, and then I go out and I buy an ounce, I could say I increased my gold by 1,000%. All right, now I have an ounce and 1.1 ounces. I mean, it's nice for me, but it's not a big it's a percentage increase, but it's not a big deal. But that's the pumper headlines you're going to see. Hungary increases its gold by 1,000%, and everyone is jumping up and down, and they know it's coming. And if you read the press release, they just basically say it's prudent, and it's only 4.4% of the reserves, and all that gold is worth $1.4 billion. So I know people like to get excited. They like to believe silver set to skyrocket, gold to soar. And I'm not trying to throw a wet rag on it, but this isn't that big of a deal. Also, not surprised yuan gold peg broke of late. Yeah, well, it never was any. I love that one. The people have been saying the gold and China was controlling the price of gold. The yuan was pegged to gold. No, it wasn't. That was just a correlation that happened for 4 or 5 months. Just like they didn't control anything. China has no control right now what's going on. The yuan is going to continue to fall, and I believe gold will continue to rise. So that was a bunch of nonsense when gold happened to be falling at the same time that the yuan was, and then people were attributing some type of Sun Tzu, China controlling the gold price. Never believed that one either. That's up there with JP Morgan has 800 million ounces of silver, COMEX default, gold, back yuan, game changer. There's one story after the other, and people like to believe it. In fact, they repeat them as if they're facts, and they're not. Heard that electric cars hurting platinum, no catalytic converters. Yeah, it's interesting that it's hurting platinum, but somehow palladium has gone nuts, and palladium's even rarer than platinum. They serve similar functions, but platinum is the superior metal. It's much denser than palladium. So I don't quite understand the price movement in platinum and palladium. But the point is that if relative rarity was the only thing you had to go on, which a lot of people who pump silver try to make it out to be, that's why the gold-silver ratio, they keep saying it's going to go to 16 to 1, 9 to 1, 1 to 1. Silver is rarer than gold. No, it's not. That has nothing to do with it. In the 70s, silver burned everyone. Yeah. Silver fortune. EVs are a bit hyped. I think their effect over the next few years will be minimal on platinum demand. Long term, yes. Hence the laughing face of silver fortune. Yes. But even in jest, I think many a truth is said in jest. A lot of people are pumping that. You'll see it in the headlines. That's why, even mine, if you don't know me, you would think that my headline is a pump because I put Hungary's game-changing gold purchase. You know, you attract a lot of people with that kind of stuff. Seth Shepherds is here. Hello, Seth. Viktor Orban stood for delivery in a stadium in Hungary. Yes. And then he said, Poland, show us yours. And then Poland says, we don't have 109 tons. Game over, said Viktor Orban. And then he built a big fence around the entire country. And then they ruled the world. All right. Well, that's about it. We've got smiley faces. Good to see people turn out tonight. I want to thank everyone for listening. Tomorrow we'll be back at 8 o'clock Eastern Standard Time. And I haven't decided what the topic is going to be. We've covered Indian silver, Indian gold, Shanghai Gold Exchange, central banks. Oh, we'll probably have Russia. What day is today? Russia is going to report. They might report tomorrow. If so, check in. They usually report on the 20th. Yeah, so I'll probably get the Russia numbers tomorrow, and if so, we'll cover them. And I expect Russia is actually it's a big deal that they really are adding gold because they are now. Let me pull out. I was mentioning to you, might as well treat you to some charts here. The top 10 and top 20 gold holding nations. I just updated them, so it's worth taking a look at. Russia is number 5 now. Here is Russia. Let's get where they are. Let me get October's. Let's see where we go here. Here we go. That's 11 to 20. I need to get you the top 10. Where are they at? Oh, here they are in the top 10. Wait a minute. This is the top 20. This is perfect. This one is good. Okay, here's your top 20. So if you look at the top 20, you can see where Russia is at 1999. So they'll definitely go over 2,000 tons. They're closing on, and Italy and France both have about 2,400 tons. The IMF, I think, is 2,800 tons. You can see India's up to 573. But if you look where to get in the top 20, you need 227 tons. Turkey has fallen down. There's your Kazakhstan, ahead of Saudi Arabia. Kazakhstan is ahead of the United Kingdom. So now, even this is not a lot of gold, considering that 2,000 tons that Russia has is worth $71 billion. That's like a month and a half of QE. It's not a lot. And there's a lot more gold in private citizens' hands and in other places than there is at central banks. All right, worth the premium. Is the 1/10 with the premium on Eagles worth the premium? Well, it depends. I mean, you can say it's easier to sell a 1/10 of an ounce if you want to sell a 1/10 of an ounce than it is to sell an ounce. And it's also easier to buy a 1/10 of an ounce. So the premiums on 1/10, they're high. I think today you might, let me take a look. Or you could check yourself. I'll give you the link to the SD Bullion. You could check them out. I think they're about probably, I would say 139 right now. I'm just guessing, given the price where it is. So instead of paying about $1,250, $1,260, you're going to pay, $13 or whatever. It's going to be more. Anyway, if you do click on that link and you do buy, Smaulgld gets a small commission. Have to disclose that. What's worth the premium, Seth, though, is a Smaulgld mug. That's real money. Mugs can't go to zero. So you want to check out your Smaulgld mugs at smaulgld.com. Did demonetization... Okay, this is a very interesting question that Gilliam Charles asked. Did demonetization of AU and AG depress their values or had no effect? Okay. So two stories. They're very good stories. In 1965, in I think it was April or May, when they finally stopped making 1964 dated 90% U.S. dimes, quarters, and half dollars. They were the 90%, which is now called junk silver or constitutional silver. Lyndon Johnson said at the time when he signed the act where they were now saying we're going to make these coins out of copper and nickel. And he said at the time that there's no reason to hoard these 90% silver coins. There'll be no profit in doing so. And he said as a warning, even if you try to do it, the U.S. Treasury has 3 billion ounces of silver, and it can and will be used to suppress the price of silver if people decide to hoard those coins. Now, that year, they used $550 million, also in 1965, to make the 1964 dated coins. They used 550 million ounces of silver. But here's another interesting thing about silver is through history, since 1857, I believe, all the coins were of the same silver content. So your dime had a certain amount of silver, a quarter had a certain amount of silver, and the half dollar had a certain amount of silver. And I used to know the numbers right off the top of my head. But it doesn't matter what they are because they didn't change. So if you think about it, even though you had inflation from 1857 to 1964, the dime did not increase in size or silver content. So silver really didn't go anywhere until the 70s. And part of the reason silver started to go somewhere higher was you have to remember that gold was priced in 1934 by an act of Congress at $35 an ounce. It remained at $35 an ounce through 1974. The official price was $35 an ounce. Now, so when they demonetized the silver, I don't know if they did it, but the price of silver did not rise in 1965, 1966. Started to rise a little late, closer to 67, 68, though. It did. But when they demonetized gold, so to speak, when they took it out of the financial system, meaning Bretton Woods would no longer require, because Nixon said we're not going to do it, even though it did require it, we're not going to allow foreign central banks who accumulate dollars that are backed by gold to bring them to the Treasury and get gold for them. So effectively, the dollar was no longer backed by gold. The United States didn't have to have the gold on hand at the Treasury. That 8133 number you're looking at used to be much higher. I think it was like 14,000, 15,000. But they lost a lot in the last 4 years of the Bretton Woods Agreement because Switzerland, Germany, France were coming to pick up their gold. They figured, not quite sure about this system with the dollar. I know the dollar's as good as gold, or at least they say it is, but we'd rather have the gold. And they were smart because once they had the gold and then Nixon took the U.S. off the gold standard, then they were right. They were better off having the gold than a promise to turn their dollars in for gold. Now, the question was, did that change the price of gold? Remember, it was fixed by statute in 1934. Also, that earlier in 1933, they said American citizens couldn't own gold. So basically, it was a fixed game. The price was $35 for 1934 to 1974. And many commentators believed that if gold was removed from the financial system that way, that the price of gold would go down because the monetary requirement and the view of gold as money would be gone, and therefore the only demand for gold would be for trinkets and jewelry. That turned out to be false, because we saw in 1972, 73, 74, around the time they were concocting the Bretton Woods agreements, that the European countries clearly thought it was still worth having, and they were hoping that they can get the United States to go back on a gold standard. And even though the United States went on a pretty much decades-long campaign to downplay gold, they never really managed to crush it, and the resulting inflation of the 70s made the gold price go higher. So removing gold from the financial system, they thought would make gold go lower. It didn't. Gold went higher and has gone higher ever since. Silver, it didn't have an immediate effect. Now, you would think, though, silver was being used as coinage in the United States, Canada, Mexico, France, Italy, England, Australia, China, India. All those countries were using silver to make billions of coins in the 60s. And you would think when they mints stopped needing all that silver that there would be a reduction in demand. And there kind of was. I mean, that's a big demand. Just I gave you that number. 550 million ounces of silver used to make 1964 dated coins. That's about the number of a little less than the total ounces used to make all of the American silver eagles from 1986 to 2018. It's a very good question there. Silver fortune, Guillaume, in regards to silver, billions of ounces were sold on the market from governments in the early... That's right. Those 3 billion ounces that Johnson talked about, they're all gone. The U.S. sold off the final amount of their silver stockpile, strategic silver stockpile, in 1982, 3, 4, 5. During the Reagan period, they finally ended up selling all that silver. So silver was repressed by lack of need for coinage, and then also by selling it, and then I think we saw a resurgence. Well, actually, the silver price did not really rebound the way gold did during the 2000s in the same way. And then Buffett bought silver in 1997. He bought like 130 million ounces in 1997. The price went up, and then he sold. The price went down a bit. Silver, if you look at its history, spikes and dives. It's not called the devil's metal because of that, but it's because of Judas. But it is the devil's metal in price action. I was originally a gold bug. Still got time. Mint Mark. Love your avatar. What does Mint Mark's avatar look like? Oh, there it is. Oh, I didn't see your comment here. Paper money is also pretty much no longer part of the monetary system as it is now. That's another very good point. Most of our money is digital. And indeed, I think there's $1 trillion in physical cash I saw on the Federal Reserve's website. But there's deposits of like 90 trillion, some ridiculous amount. So your unbacked money that you have in a bank isn't backed by paper currencies. And to make it worse, 2/3 of U.S. currency in bills is held overseas. So there is a clear dollar shortage, and I mean that in the physical dollar shortage. All right, I'm sorry, I missed Mint Mark's comment. Let's see, what else here? City's on flames. All right. Z-Spec, Seal, Armstrong Economics is free 90%. I love my junk silver. I remember it was always was obvious when you found the silver coins. It just looked so much better than the clad nickel coins. I remember as a kid I used to see them, and I had a coffee, what was it? A coffee can, yeah, and I had to put a slit in the middle of the plastic jar, and I had I had like $20 worth of them, and they were silver, and the coffee was rubbed on them, and it looked so much nicer than the 50. I had the 50-cent pieces too, and you could tell the difference between the Kennedys. Even you could tell the difference between the Kennedys that were not all clad. They were 40% silver. They still look different than the 1964 ones. So the prices are now primarily due to the value of the dollar. See, this is the thing, Liam. I believe that gold is more the anti-dollar than silver. Gold is still a monetary metal with far less industrial use and a much higher premium for jewelry. The bulk of gold sales are jewelry, not even for monetary use. But the monetary value or the investment value of gold is much greater than the investment value of silver, and it's also a much greater percentage of overall gold demand. And there's also a jewelry / investment component to a lot of gold sales in Asia. Indians will buy 18, 22 karat gold necklaces, bracelets. They'll consider that part of their wealth. The silver, and I've had commentary on this from people from Mexico and India, silver is considered by some a throwaway metal, and it makes sense. If people, you have a ring and you paid $8 for it, or a necklace you paid $16, $12, it breaks. It's not the same thing as if your $300 or $400 gold necklace breaks. It's and they say that it's the same in industry. A lot of silver doesn't get recovered because it's just not worth the effort to do so. Although they do it. It's not like all the silver that's in industrial waste, electronic waste gets thrown out. But gold, they say almost, if it gets lost, it gets lost. That's one thing. But it generally doesn't get thrown out, and it does get recycled. That's clear. Whereas with silver, you lose a piece of silver. It's not the end of the world. Like if you lost a piece of gold. Yeah, central banks hold gold as foreign currencies. That's right. Let's see. Andrew, I never bought junk, but I found silver in my Canadian change. A dime almost looked aluminum and clinked different. Yeah, I found from time to time the Canadians are 80%. I wish I still had the stuff I had as a kid. I bought Hot Wheels with it. But I have found the Canadian coins, 80% silver. They went up to 1967 and 1968. And in fact, half of the year, they reduced. There's some issue with some are 80% and some are less percent. And you really can't tell when you get the 1968 Canadians. All right. Well, thank you very much for listening. And we will see you tomorrow night, probably 8 o'clock again. So thanks for listening.